everyone wants to have this like really tight relationship with Trump and like ask him for favors all the time. It seems like Vance was very strategic about this. He like didn't even ask him for him to endorse him.
I've worked with his office a lot. He is thoughtful, I think, and diverges from a lot of the orthodoxy on the Republican Party, particularly on spending.
If you're in a business that is importing things to the U.S., you're going to do relatively less well.
Emergency pod, JD Vance, our future vice president and president. Oh my God. To discuss that as well as government intervention into strategic markets and super cool stuff like a strategic resilience reserve, we have on today Arnab Datta, one of the architects of the Strategic Petroleum Reserve Reform and the director of policy implementation at the think tank Employ America. Co-hosting today, Matt Klein, who writes the excellent Overshoot newsletter. Matt, JD Vance in economics, kick us off.
Okay.
I hear he's read your book.
Yes, that's right. And in fact, you can see in things like when he asked Jerome Powell, the chairman of the Federal Reserve Board, questions about why the dollar should be the reserve currency, why we would want it to be a reserve currency. If it's a problem that foreigners like using the dollar, that is, I think, indicative of the fact that he and his team have read and absorbed at least some of the points in the book that I wrote with Michael Pettis a couple of years ago, Trade Wars or Class Wars. That's right. The argument basically being that it's our currency, and the U.S. economy is a large economy globally, but the use of the dollar vastly exceeds the size of the U.S. economy. And so for an economy that's, between 20 and 25% of the world, but that has a currency and financial system that meets the needs of, 80% of the world, it's obviously going to lead to some really big mismatches between what makes sense for global savers and investors versus what makes sense for Americans. And so there's an argument to be made that you want to break that link, that you want to have the dollar really being just used by Americans mostly, and have the U.S. financial system focus on what makes sense for Americans and not focusing on creating assets for foreigners. That's an argument that Michael and I made in our book. It seems like something that Vance is interested in, and has expressed in the past and more recently as well.
So, I guess two questions. Like, if a president wants to like devalue the dollar and take America, make sure that the U.S. is not the global reserve currency, let's start with like how practically a president would go about trying to realize that.
So, it would help to have legislation. You could do things without it, but I mean, basically, you want to make it less. You want to make U.S. assets less accessible and less attractive for foreigners. Is one way of now. Obviously, there are lots of ways to do that, right? You could very arbitrarily enforce the rule of law, use sanctions, confiscate. I mean, there are a lot of countries that have real trouble attracting foreign investment that do this all the time without thinking about exorbitant burden or anything like that. So there's clearly a playbook there. Maybe one that the Trump administration would find attractive. There are other things you can do as well. There's actually legislation that was proposed 5-6 years ago. It was bipartisan legislation. I have no idea what the situation is now. I haven't heard anything about it more recently. But basically, the deal was that you would give the Federal Reserve the authority to impose a tax on any foreign purchase of U.S. assets. And so it doesn't matter whether it's a foreigner wanting to open a bank account in the U.S. or you want to buy like a U.S. stock or something from whatever house. You put a tax, and basically they could adjust the tax based on their judgment of what foreign demand for U.S. assets was in order to sort of balance financial inflows and outflows. That was one. That kind of tool would be helpful. You could also have something like what a lot of other countries do. If you want to lower the value of exchange rate, you have your central bank buy foreign assets. You create dollars, you buy something else. So, for example, the Swiss National Bank has bought a lot of dollars and euros, including stocks and other things, because but lots of they create Swiss francs, and that they'll use that to manage exchange rate. And then more recently, they've been selling, but that gives them a tool to manage exchange rate. Singapore does this. In fact, Singapore, the central bank, the monetary authority of Singapore, they don't set interest rates the way a lot of big central banks do. They just say we're going to target the exchange rate, and then they let interest rates move accordingly based on that. There are a lot of other ways of going about it, but there's no inherent reason why you couldn't have the Fed do that. You'd have to, again, it probably would help to have some kind of legislation to tell them to do that, but I mean, it's not exactly unorthodox. Those are kind of the main things that would work.
All right, so I am skeptical that Trump himself will get over the idea of a strong dollar being a bad thing. But say he makes that intellectual leap and Vance gets his way.
Just got to change the word. It's not strong. It's expensive. It's overpriced. It's overpriced. It's not a good deal. It's not a good deal.
What would that do to the economy?
So
or the global economy?
Well, okay,
Global
there's
and
different
American
questions.
economy.
Okay, so we'll start with the U.S. economy because that's arguably simpler. So in general, right, there's every currency. There's always exchange rates, right? It's just a question of the prices in your country versus the prices in another country, and those exchange rates balance in different ways, whether it's more attractive to buy stuff that's made in one place versus another place. And so if you change those relative prices, what should happen is that if you make the dollar less expensive, lower its value relative to other currencies, then people in America should find things made in the U.S. relatively cheaper and more affordable than things made outside the U.S. And people outside the U.S. should find things made in the U.S. more affordable than things made outside the U.S. And so what that should do is that should mean that there's more buying of U.S.-made stuff and less American buying of non-U.S. stuff. That's what should happen. That's the very first order effect. Now, there are then some reasonable second order effects you could expect to happen. One would be that to the extent that American companies are exporting things, they should, generate more, they can sell more things abroad because the prices are better. That should increase their profits. That might increase investment in hiring in export industries. The flip side being that if you're in a business that is importing things to the U.S., you're going to do relatively less well, potentially. So there's a transfer internally within the U.S. economy from that perspective. There's also, abroad, there's transfers, right? If you're a company that competes globally with U.S. companies globally, you're going to potentially lose out relative to those companies. So maybe not. So this is not how necessarily airplane pricing works. But if you'd imagine like Airbus and Boeing, right? It's sort of an example of two companies and two currency zones that export globally. And again, they don't necessarily price these things in US dollars. So it's not a perfect example, but like that would be the kind of thing. Like one would lose and one would gain. That's one approach. A corollary of if you have more investment in hiring and production in the U.S. in response to a weaker dollar, you can expect and higher prices for imports. That should be on the margin a kind of inflationary impulse, which sometimes would be a welcome thing. You've seen the Bank of Japan being very big in intervening in the currency markets in the past, and the Swiss National Bank explicitly, and the Swedish central bank explicitly for the purpose of saying our inflation is too low. We want inflation to go up, so we're going to push the currency down to generate inflation. That's not what people are saying now for the U.S., but that is generally the kind of thing you would expect to happen in general. These are sort of the normal textbook effects. The actual impact could be a lot more complex. There are lots of places that when they do currency interventions, they do other things at the same time to sort of mitigate some of those effects. China is a very good example of this. They'll manage the exchange rate one way, but then they will, sterilization is the technical term often that's used to describe this. This sort of offsets some of the impact. So it doesn't necessarily generate the kind of inflation you'd expect, or other corollary effects. I don't think that's necessarily what you'd see in the U.S. based on, the kinds of things people have said. But I mean, these are kinds of some of the effects that you could expect.
What are our first and second order global
So partly depends on, how the magnitudes we're talking about. Right. So, I mean, like a 10% move, 20% move, like honestly, that's not that out of the ordinary for like, if you just look at a chart of exchange rates, like things that can happen over, a multi-year span. That's not, people deal with that. You're talking about something bigger, then it depends. But then there's kind of funny, there's a lot of research that economists have published on this over the years. And it seems to be like, well, the dollar goes up, then it's bad for emerging markets. The dollar goes down, it's bad for emerging markets. So people don't really there doesn't seem to be like a real consensus there. Like if it goes up, the argument, the dollar becomes more expensive, then that tightens financial conditions, because the U.S. financial system plays such an outsized role in the global economy and the intermediation of savings and investment outside the United States, then it becomes harder to borrow things, and there's less investment in production outside the U.S. So like you could have a situation where like a Thai factory is not going to, suddenly, be putting up more capacity for building semiconductor testing or cars or whatever because the dollar is expensive. I mean, that's like one theory. There's another theory, which is that the dollar goes down, then that's bad because it hurts the exports. And so again, the Thai factory is not going to be making as much money because the Thai baht is appreciated relative to the dollar, and so that's bad. So you can have arguments going either way. I don't really know if anyone's going to sort of systematically figure out what the net impact is. I think it depends on the context. There are also arguments that it literally doesn't matter because all these international trade is invoiced in dollars anyway. And so the actual change in the value of the dollar doesn't matter. I'm not sure I buy that one. Because again, like sooner or later, someone is turning at those dollars into their local currency for profits to pay their owners, and that you do see impact there. But so what it means globally is tricky, especially if we're talking about like a massive move. If we're talking about a really massive move, then that could be potentially more interesting because it might lead to things of like, well, people are going to sell assets. Does that lead to, higher U.S. interest rates because of that, or like there are other potential factors there. But those are the kinds of things. Usually you don't see currencies move just for their own reason. Usually they move in response to something else, like a big move in the financial crisis, for example, the big dollar appreciation, because it wasn't because like someone decided we want to make the dollar more expensive. It's because a lot of people owed a lot of money in dollars and had to pay it up all at once, that kind of thing. And so this kind of situation, we haven't really quite tested it before.
Let's talk tariffs. Matt, what's also sort of book inspired? I don't even.
No, not really. I mean, we actually wrote about how a lot of arguments about tariffs don't really make sense a lot of the time because, in a world of floating exchange rates, that what you'd expect is that the currency would move to offset an impact of a tariff. Maybe it doesn't quite work that way, but the general assumption would be if you put a tariff so that prices in the U.S. are higher than outside the U.S., then people are just going to say, okay, we're going to invest more in building stuff in the U.S. And then, which is, arguably a good thing if you want more investment in the U.S., but in terms of what the impact is on the trade balance, like you need to import stuff to make that extra investment and capital spend in the U.S. And so the net effect could be nothing, right? I mean, the standard argument, the textbook argument is that tariffs actually penalize your exporters because you're going to import just as much anyway, but then your exchange rate goes up. And so your exports become less competitive. There are probably a lot of reasons why that doesn't necessarily work out. And it also depends on to the extent that tariffs are tax increases. If those tax increases are purely just a tax increase and the government budget tightens, you would expect in that case that would reduce spending by Americans because they have less money. And so that would reduce the trade deficit, but it does it in a way by making us poorer. So that's not really good either. So, if you look at what some people in the Trump administration are saying about what they're going to do with tariff revenue, it's to offset tax cuts elsewhere. So the net effect is a lot trickier. I don't think it's really hard to. I think it is hard to say what the net effect would be.
All right, let's talk industrial policy.
I don't know.
Yeah. I mean, I think I've worked with his office a lot on some initiatives, and I think he is thoughtful. I think and diverges from a lot of the orthodoxy on the Republican Party, particularly on spending. Like, I think he is someone who is willing to put money behind investments in strategic sectors. The question I guess I have going forward is like, how much does he actually define that conversation in a future Trump administration? Because I think there is, even on areas where there is bipartisan consensus that something needs to be done and something should be supported. Let's take an industry like next-gen geothermal industry, right? Energy, which is something that is bipartisan coded, has like a lot of Republican senators who are supportive of, supporting this burgeoning industry, but they don't want to spend any money. And I'd be curious how, future Vice President Vance can influence some of the thinking on those conversations.
He did vote for the CHIPS Act when he's been talking about it in the past. It was sort of this like isolationist coded thing. It's like, we don't want to have to care about Taiwan was like the like the energy of his support behind it. But, he does have this like bias towards, it's almost like she-esque like bias towards like manufacturing as like the only part of the economy that's like real and matters. Which is, sort of interesting from someone who came from the Valley, but like, whatever, God bless him.
He didn't come from the Valley. He came from Ohio.
Well, yeah, whatever. Was repulsed
the hill, then
by
the Valley,
I guess.
No, one thing I was just going to add is like, he does have, I'm always like a little curious about what he actually thinks, because he does have this tendency to look for the most like partisan kind of like fighting aspect of some issue. And I think the semiconductor example you just used, and like, we don't want to protect Taiwan, is like one version of it. The other version is like housing price. Like, we need to do something about housing prices because all these immigrants are like driving up housing prices, which has like no evidence and is like a nonsense argument. But housing prices are high, and like, we should do something about them. And so I'm never quite sure how to like evaluate those things.
I don't know. It's just this like, look, he's like been playing a game really aggressively for the past 8 years. And, we've done a lot of Shakespeare emergency episodes over the past few past few months, and it's, the whole knowing yourself question of, once clearly there's an aspect of him that could be an Employ America, staffer, right? Like he's very much in the weeds. He's clearly very smart and thoughtful in a way, we haven't had in a long time in the executive. I mean, I guess you sort of have Obama and Clinton as like versions of this, but he's another one of these like serious intellectual thinker people. But he has also been able to put on the clothes of, some guy who like does great on Tucker Carlson. And he's been completely inhabiting that role for a number of years now. And, does that end now? Does it, I mean, is it in his marrow at this point? I think is something we'll all learn if Trump wins over the next few years. Arnab, Matt, you wanted to jump in on the atmospherics?
Oh, no, it's not Shakespeare, but in Man for All Seasons, there's a line that you've reminded me of, which is, but for whales. It's basically, you're giving up all of your principles for a little bit of power, and then, okay, but like what? You get to become like the Lord of, the Bishop of Wales or something like that. That's what Thomas More says to him, but for whales. But
there is one question I would like to ask the witness. That's a chain of office you're wearing. May I see it? The Red Dragon. What's this?
Sir Richard is appointed Attorney General for Wales.
For Wales? Why, Richard, it profits a man nothing to give his soul for the whole world. But for Wales.
But yeah, this is the difference, right? Is like, he's like, he's got as good a chance as anyone of like being president now, right? Not just from if Trump dies perspective, but running in 4 or 8 years. Your Faustian bargain here is like has a potential to have a pretty high payout for you from a just like a power acquisition perspective. Arnab, there's been some reporting about how all the staffers are like really tall and smoke a lot. Can we get like a vibe check on the like broader energy of the JD Vance universe?
That is not something I have experienced. The folks that I know from his world are average height, and as far as I know, don't smoke. But I don't hang out with them enough to know that for sure, I guess.
Okay, so no zins in the office. Fair enough.
I think that's
maybe
as much
no
a
zins
vibe
around
as
Arnab.
Yeah, that might just be a vibe as much as anything.
Okay. The one thing I'll say, interesting discovery in my aggressive Googling over the past 48 hours. His wife spent a year in China after college as a Yale China fellow teaching at Sun Yat-sen University. So what does that mean? Like, probably nothing, but like,
I mean, Matt Klein just spent a long time in China too, so.
Fair.
My big takeaway from this is Yale Law School just keeps winning, controlling the country every other way.
It's we're gonna have Amy Chua on the podcast coming up.
She's gonna be. I guess she's too old to go on the Supreme Court, but that would be an interesting nomination.
Woo!
Wow.
Woo.
I don't know. I mean, where
is she? Right? How old is she?
I think she's 60s. I mean, she's old enough that someone who really were being aggressive would probably
61. Yeah, that's not gonna cut it. The other sort of like Shakespeare thing is, I got a feeling like, again, like the but for whales thing, like if he starts trying to have agency and like push Trump in a direction, it's been interesting reading the sort of coverage of how he got it. And, one of the interesting things is like everyone wants to have this like really tight relationship with Trump and like ask him for favors all the time. And like, it seems like Vance was very strategic about this. And he literally only asked him, he like didn't even ask him for him to endorse him. And like the only thing he asked for some support on was like endorsing this like transportation safety bill or something. And if and when, Vance is sitting in the White House and like thinks it's like, this is my time to do something and push a thing. I wonder, like, I think there's like a not insignificant chance that Trump ends up, seeing his own mortality and like becoming very threatened by this person who, obviously has like designs on the throne at some point. And I wonder just how much that dynamic may get a lot more complicated than it is now, of this sort of like, mentor protege thing into something a little more contentious and dark.
Yeah, it's hard to imagine. I just can't imagine Trump. I'm just thinking about Trump in a mentor relationship, and that sounds not great.
Well, it's the thing, right? It's like he's like
is he gonna get annoyed when Vance gets some good press or something like that? Like, it just and like try to cut him down a little bit. I don't know.
Well, just like if he starts pushing things Trump doesn't want to be pushed, right? Yeah. And then all of a sudden he goes from this like surrogate son to like a, someone who's trying to like do unpopular things that are obnoxious. Matt, can you talk about this better than I can?
I'm just surprised that someone who's gone as far as he has and talking about January 6th and so forth would bother to push Trump in a place that Trump wouldn't want to go anyway.
Yeah. So he's still gonna hide his talents and bide his time. That's the base case.
There's nothing to hide, right? I mean, that's like, it's just, this is, I don't know. I mean, I think he's been very clear over the past few years about what he thinks about, constitutional government and what, he think, what his responsibility as a senator and so forth. So I don't think there's really any
Well, that's cool. You know what's cooler? Critical minerals and stockpiling them or buying and selling them in smart ways. Arnab, let's do a bit of a backstory of the first big push in, starting from the mid 20th century of America doing this. The Strategic Petroleum Reserve. What is it, and how has it evolved over time?